Welcome back to Morning Markets on Monday, the 31st of January. On screen, we can see the key market moves from Friday. In general, we had positive returns from global equities, led by the US with technology, and the larger consumer discretionary firms leading the way, seeing a rebound in price after a challenging week. The S&P 500 was up 2.4% on the day, and the Nasdaq Composite up 3.1%. In terms of bond yields, US, European and UK bonds yields pulled in towards the end of the day on Friday after 4 consecutive days of yields pushing out higher in the lead up to and following the US Federal Reserve meeting. Sterling was relatively unchanged relative to the dollar on the day. However, we've seen throughout the week investors increasing their exposure to US dollar assets. Cable finished the week at 134, down from 135. In terms of sterling relative to the euro, sterling was actually stronger through the week, moving from 119 to 120 on the day. One of the factors challenging the euro currency was political concern in Italy. There was concern that the current president would not push forward to serve his second term, putting the Prime Minister and leader of the coalition, Mario Draghi, and his current spending plans at risk. After persuasion, when Parliament and regional delegates failed to find a suitable alternative candidate, Mattarella agreed to stand again and won a landslide victory on Saturday night. This puts Draghi, the former president of the European Central Bank, in the driving seat as a voice of fiscal reform in the Eurozone, but also to push forward with his spending plans in Italy. Bond yields moved back to where they were 1 week earlier on the back of the news. In terms of the week ahead, the key points today, we will receive flash GDP reports for the Eurozone. We'll also hear more on the political front as the UN Security Council meet to discuss the situation between Russia and Ukraine at a point where the US is looking to impose sanctions. Through the week, we'll also have PMI reports rolling in from the US and Europe. Yesterday, we had the results from China, which demonstrated a robust expansion within the service and the manufacturing sector. However, there was some concern by supply chain managers around rising infection rates, given the zero-tolerance COVID approach which China take as we run into the China Lunar New Year holidays and the Beijing Winter Olympic Games. Last week, we focused a lot on the decision and the guidance from the US Federal Reserve. On Thursday, we'll have the decision from the Bank of England's Monetary Policy Committee, where there is an expectation that they'll start to increase interest rates from 0.25 to 0.5%, given the recent inflation print of 5.4%. The ECB are expected to remain in easing mode for the time being, but markets will be paying close attention towards their forward guidance on inflation and economic growth. So the data which is coming out today will be of importance in informing that view. Thank you very much for watching, and we look forward to bringing you up to date throughout the week here on Morning Markets.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.